Today, ladies and gentlemen, we are diving down into my 5 best performing dividend stocks this year, and then we're going to take a look at my over $390,000 stock portfolio so I can show you guys these actual dividend positions, how they're performing. We're going to look at the projected payout and just show you how that dividend income actually looks from the account side. And then, of course, we're going to analyze some of my growth positions just to see how they're performing, because one of them is hitting me pretty bad right now, and some of them are actually doing pretty good. If this is a conversation you can appreciate, in return, as always, I ask that you just simply hit that like button and consider subscribing, because I'll always update you on my portfolio every single week on this channel as I document my journey to financial independence to perhaps one day retire early. But first and foremost, with numero uno, guys, I've been talking about this one like a broken record, but Enbridge, this Canadian pipeline company that primarily deals with the distribution of gas, natural gas, they're getting involved in the renewable energy sector. These aren't all going to be Canadian stocks, by the way, but these things have been like the goose that laid the golden egg this year, because this thing is slaughtering the average market performance, being up 18.67% with still almost a 6% starting yield. I didn't take this one on as early as the beginning of the year, but I'm still seeing pretty substantial growth with that payout as well, leading us into numero dos. And again, these are not all Canadian stocks, but TELUS Corporation, this Canadian telecom giant, which when I was buying it was yielding almost 5%, is now trading up 15.83% year to date, and almost the entire Canadian telecom sector is crushing it. Bell Communications is at all-time highs. I recently started to buy into Verizon's Communications, a US telecom company, which I'm now like up over 5% on, yielding a 5% dividend. It's really weird that these incredibly boring sectors to the market are what are really providing the gems, the goose that's laying those continual golden eggs for us throughout this very volatile year. So let's talk about energy companies. Southern Company, this is one I rarely talk about, which is kind of a coal, nuclear energy, natural gas-based company in the US, is trading up 11.93% year to date with a starting yield of 3.46%. I have been holding on to this one for years, but it's really nice to see these really boring and, again, kind of just not talked about companies really yielding some stability for my portfolio, including Algonquin Power and Utility Corp. This is one that I recently just loaded the boat on, and I'm finally green on this position. It is absolutely crushing it, also paying me closer to a 5% yield, finally up 10.52% year to date. And in the healthcare sector, because recently I've been buying Pfizer, that one's been boding pretty well for my portfolio, but Johnson & Johnson, this is a ride or die company that you could hold for 100+ years, that your grandchildren could inherit from your portfolio. And this thing is up 6.55% year to date, which might not be as appealing, but as the general market is still trading down, this thing has been a safe haven for stability that I know most people are like, oh, why would I buy Johnson & Johnson? Because, guys, if the stock is exciting, you're usually investing in the wrong stock. That's why those exciting companies should be a very small percentage of your portfolio. And on that note, guys, outside of these conglomerated telecos, energy, healthcare stocks, let's see how they're actually doing within my portfolio. So we'll kick it off with my dividend portfolio. This is my tax-free savings account where I can make tax-free income in perpetuity for the rest of my life. One of my longest standing accounts, best performing account, well, not my best performing, but definitely outperforming the S&P 500 continually, primarily because of the dividend stocks this year. And taking a look at the Canadian companies, guys, I now see no red across the entire Canadian spectrum. I mean, take a look at this. Algonquin was the only red stock, and now we're up 4.38%. The Canadian banks have been pulling back slightly this year, but because I've been in them for so long, I'm still up massive gains. I mean, they've been OG to this account for a very long time. So on the US side of the accounts, just take a look at this, guys, because I'm always going to keep Apple and Microsoft in here. I did scale them down slightly at the beginning of this year. I'm not going to touch them now in perpetuity for as long as I can see in the foreseeable future, because I just want them to be core holdings in the portfolio. But as mentioned, we're now up 5% on Pfizer. Here's Southern Company just crapping out 66% cap gains, let alone those incredible yields we're going to take a look at in a second. It's nice to see some stabilization coming out of the REIT sector, with STAG, my VYM, which I'm debating on what I want to do with these index funds. I keep saying I'm going to hold them into the long term, but when I start seeing attractive yields in other companies I want to buy, I kind of consider selling this, but I'm not on the edge of that just yet. But then we have Verizon, the recent ad that I'm now up 5% on. I sold MPW to buy Verizon. And so for that position is boding to be pretty well in this portfolio as well. So let's talk about the actual income itself, just to show you guys how this is projected out. Because luckily, I love the fact that Scotiabank does a really good projection model. And we can see the actual yield on cost here, which is phenomenal because I don't own one Canadian stock that's yielding under 4%. And I also don't own any US stocks except for, I think, the index fund and clearly Microsoft and, well, even Apple's on yield on cost is over 5%. But most of my US stocks are yielding over 3%. And look at Southern Company at 5.76%, guys. The current starting yield is only 3.46. This is what long-term investing can really prove out over time. If you're very patient with these kind of, dividend boring based companies, they should always be looked at as a long-term perspective. So we can see that April is going to be a phenomenal month here, guys, because all my Canadian positions are paying out this April, going to give me a lot of reinvestable cash flow. And on the US side of the border, we really only have Stag Industrial paying out this month, but in combination, we have 3,000 Canadian income coming in, 1,827 US income coming in. So let's just talk about some of the growth positions I've taken on. I'm not going to get into all my accounts today. I just want to talk about what is most prevalent. And in my managed account where I took on this new growth position being Alibaba, and this account specifically is kind of hitting me pretty hard. I mean, I'm now down 11.68%. I don't know why I got so overzealous with this one, but I am looking at it as a short-term swing trade. So I don't really care what it's doing in the midterm here because I'm going to come back in probably the next 3 to 6 months. And I'm praying that this is going to be higher than I paid for it at $118 a share, so I can liquidate it. I'm going to take the gains, put them into my RRSP, and then primarily just use that cash for personal use. It won't be investment capital. But outside of that, guys, every other position in here is crushing it. Here's where I hold more TELUS stock, which I'm up 32% on. Basically, I can't do any wrong when it comes to the Canadian stocks. So let's talk about my business account. So in my corporation here, guys, this is probably the newest account. It hasn't even existed for a year. It is in the green. I think I'm up 3 or 4% over the entire year, which still is pretty good against the general markets. But take a look. A lot of this is being driven, again, by the Canadian companies like Enbridge. Royal Bank is now a flat position in here since I've been buying it. And Algonquin Power finally seeing some green, which is pretty wonderful, right? And then in the actual growth positions outside of BABA from my managed account, I also own Alibaba in here, which I'm up 10%. So they kind of equalize each other out. So I'm no longer really positive or negative on it. If we minus out the $900 US from the gains in this account, which are all represented in Canadian dollars, I'm probably almost just flat or down about $100. So Alibaba, like I said, it's a newer position. We'll be patient with it. We'll see where it goes. But outside of that, guys, Google, Facebook, they're very boring, right? And I didn't really mention that I also added McDonald's recently. I really want to start adding in those consumer staple brands, McDonald's, Procter & Gamble. I'm really kind of liking those companies to round off the dividend portfolio. And the only place I really have room to do that right now is in my my corporate account. Over time, I might actually pull some corporate income out of this account to contribute to my RSP, where I'd prefer to put McDonald's and Procter & Gamble, but I would much rather just own them overall than be finicky about the tax advantages in specific accounts, considering the scale of my current portfolio. But outside of that, guys, this is where we sit. Tesla's up 50% still. I don't really have a plan to do much with these currently, but over time, as my living circumstances change, as my expenses go up, I am going to be liquidating some of these. I really want to sell down more Facebook if it can recover. I would like to sell down a bit of BABA, but I'm looking to hold most of these positions for the next 10, 20, 30 years. But for right now, I'm just going to continue adjusting them as hopefully they rally back, because again, I'm trying to get to that goal of over $1,000 a month in dividend income. But at this point, I want to know what you guys think about all this in that comment section below. I would love to hear from you, but these are the general portfolio updates this week. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.